Ken Phillips is from the Independent Contractors Association, and I'm going to start with him. Welcome, Ken.
Just so you know, I'm talking on tax and trade, so you're getting both of it all at once. And Independent Contractors Australia, we were formed about 18 years ago. We're a volunteer advocacy group. I'm not paid. I lie. I'm paid $1 a month to do what we do. There are 2.1 million self-employed people in Australia. That's close around about 18% of the workforce. And if you take the people that they employ, which is roughly 5 million, you've got about 55% of the workforce. Our argument to economists, if you don't get your settings right for that sector of the workforce, you don't get anything right, basically, in the economy. My paper, by the way, is just on the app, which I've put up there. And what I'm going to do is tell you two stories. So we advocate and work to defend the right of people to be self-employed. It's a basic economic right, and if it's taken away from you, well, you lose that core freedom. So two stories. Let me take you back to 2012, the Australian Labor Party in government, and they decide that truckies, so the first story is all about truckies, long-haul truckies. So they decide that the truckies are taking drugs, overloading the trucks and speeding because they're not paid enough. So the problem here is that the rates for drivers is causing them to crash their trucks, and so therefore it's not safe. So they bring in a law called the Road Safety Remuneration Act, and they create a tribunal called the Road Safety Remuneration Tribunal. And so this tribunal is supposed to have a look at safe rates. How do we make sure that we've got rates in the community that for truckies that people have to pay to make sure that they all drive safely? So they waffle on for about a few years and a whole lot of conflabs, and so you've got commissioners, so it's a de facto industrial relations commission, more closely referred to as a Mickey Mouse court. So they then do all of this sort of stuff for quite a while, do analysis and so forth, and come to just before Christmas 2015, make their first order. So they put out an order that says that this is what has to be paid to owner drivers. Now understand that the trucking industry is broadly split into two areas. There are companies that have employees, and they are the large multinational companies, so you've got Toll, Linfox, etc., etc. They all have very cosy relationships with the Transport Workers Union, and then you've got all the independents out there, all the small guys all over the place, small guys and gals. One truck they own themselves, up to the hock and so forth, and providing an extremely competitive arrangement, and extremely competitive against the major trucking companies. And so these rates that were then required increase the rate that owner drivers must be paid, so you get fined if you don't pay them that amount, and increase it to such an enormous extent that it immediately meant 50,000 owner drivers in Australia doing long-haul trucking were all out of business. So this arrangement came in place in just before Christmas. All of a sudden there was a great hullabaloo. When it started to dawn on the truckies just what was going on, people started losing their contracts straight away, and it wasn't to come in until April the 4th of 2016. So there was a great eruption that occurred, and a number of you might remember that. So we became involved. I'd been involved back when they were putting the act together. We put submissions in against it, saying this is the sort of thing that would happen. And so then the industry associations that were involved in all of this started appealing against it. And what they did is they put in applications into the federal court arguing that the RSRT, the tribunal, had misunderstood the act and hadn't applied the act properly and went through and all that sort of palaver that went on. Got nowhere, absolutely nowhere, because they were arguing the case from within the perspective of the act. So we were heavily involved, not in all of that sort of stuff, because that's not what we do, but we were in the press and doing all this sort of stuff. And on my board, I've got a volunteer. One of my volunteers is a lawyer. He's been a lawyer for about 2 years. He's in his late 60s, been a very experienced businessman, and decided to become a lawyer because he was a bit bored. So I was sitting down with him one day and I said, look, this just doesn't make sense. This whole thing doesn't make sense. Here you've got, it's quite legal for price setting of employment contracts. It doesn't make sense that the Commonwealth has the capacity to price fix commercial contracts. It just doesn't make sense. So we're sitting there chatting about it, we said, let's take a constitutional challenge to the whole thing, right? So here's me and him, 2 years he's been a lawyer. We thought, right, bang, we're going to do it. So we announced it to the press. And so all of a sudden I'm on TV, I'm on radio. We had not a brass razoo, not a cent. Then with all the publicity that went on, then I had a lawyer fall out of heaven, constitutional lawyer. He came in and said, I want to help you. I said, oh, great, great. So we were preparing to run a constitutional challenge based on the fact that the Commonwealth doesn't have the power to price fix commercial contracts. He said, no. Better one, interstate trade, freedom of interstate trade. So we started running the interstate trade argument. Good, great flurry of activity. So what do we have to do? We put up on our website, we need money. 2 weeks, 25 grand we pulled in, right? 2 weeks, we had about 200 people give us their stories. I'm on the phone to all of them because we have to get the affidavits together. So I'm on the phone to all of them, trying to get their stories. Speaking to some guy out somewhere between the middle of between Perth and Brisbane. He does the Perth-Brisbane run, right? He's out there, tells me his story. He's stuck. He can't pay for the petrol to get home to Perth because the contract's been cancelled on him. He's sitting out the middle there somewhere, and we sort of say, okay, well, look, email me. So I thought, oh, mate, haven't got an email out here. I'll have to try the local pub. So I had to get into the local pub, see if we get emails done. So here we've got this flurry of activity, trying to pull together affidavits. So in the end, out of all of that, we pulled together about 40 stories that we could run with. We wound up in the end with about 10 affidavits. These have all got to be hand-signed. I'm getting people in the bush somewhere out of WA to somehow or other get us an original copy. We had 3 days to get it into the High Court. Flurry of activity. 2 weeks, and we're in front of the Chief Justice of Australia. From the time we decided to launch the action to the time we're in front of the Chief Justice of Australia, 2 weeks, we raised 25 grand and I had a barrister fall out of heaven. The Chief Justice of Australia said, you have an arguable case. Thank you very much, and referred it down to the Federal Court. Why did we do this? So we didn't get a decision, but he said we had an arguable case. What we were in the business of doing, Dan Turnbull and his people have decided this is a great issue. We'll promise that after the next election that we will fix this all up. In the meantime, people were going broke. They wanted to run a political campaign to keep the thing hot. I wasn't going to let him. So I wanted to raise the heat in the kitchen. There are a whole lot of people raising the heat in the kitchen. I thought, what can we practically do? So we raised the heat in the kitchen. And we got the decision on the Friday, and by then there'd been a momentum and there was a bill to repeal the Act, and it was passed on the following Monday. So the Act was dead. So we didn't need to proceed with our constitutional challenge. I've got to tell you that one of the things that happened with that though, and I became very involved, got to know a huge number of truckies, people on our website, all that sort of stuff. And I've got a very good friend who's a very senior figure in the Labor Party in Victoria. And he had his 50th birthday party on the Saturday after we had the High Court decision, and before the Monday. And I was going to his, and anyone from Melbourne will know Collingwood. Collingwood is as working class Labor as you can get. So I was going to his birthday party. I get outside the pub, and the phone rings. And the message is that we've had our first suicide. Truckie had suicided, right? And I walked into that celebration the heartbeat of Labor in Melbourne. And these are people who have just destroyed someone's life. And they're destroying the lives of large numbers of people. We're not messing around with theory here. We're messing around with people's lives. We had 3 suicides, confirmed suicides over this. We're now going through a long process of seeking to do a class action for damages. And we've got enough figures to indicate the damages will be in the order of $450 million. So that's story number 1. What we did is use the Constitution. Story number 2, Rod Douglas, 55-year-old IT contractor, been operating as a partnership all of his life, earning about $160,000 a year, in that sort of ballpark, up and down all over the place. And for years he'd been doing whatever the tax office said. If you have a partnership, you're allowed to split your income, theoretically, right? It's quite normal sort of stuff. So sometimes, since in his 30s, they'd say, look, you can split your income 50-50, sometimes 25-75, so they did whatever they said. 2006, the tax office issued a very clear statement, the tax commissioner, saying, if you're in a partnership, husband and wife partnership, you can split your income 50-50. So he was doing that until the tax office came round to 2014 and decided to change their mind. Now, under the Tax Act, current Tax Act, if you're an individual, the tax office can only go back over your tax return, can only go back 2 years. However, if the tax office form the opinion that you have committed fraud or evasion, they can go back as far as they like. So they turned round to him and formed the opinion that he had committed fraud and evasion because he had followed the tax office website notification and not sought professional advice. He put in his tax returns on his own. Issued him a $440,000 bill. He rang us, we decided to take the case on. So what did we do? I had these lawyers, one that had fallen out of heaven, believer in the Constitution. We turned around and mounted an argument that under the Constitution, the tax office cannot act on the opinion of fraud or evasion unless they have sought approval from the federal court. So they cannot issue the $440,000 unless they've gone through the federal court first. That, I know a heck of a lot about the behaviour of the tax office, that would blow up a whole lot of the behaviour of the tax office, their systemic behaviour. So we took that into the federal court. I'm pretty good at organising media stuff, exposure. We gave this hell of a run in the press. We got into court. I've got a barrister up the front and I'm sitting down the back there, and this judge, who had been the senior counsel for the tax office for 10 years, mind you, was furious, absolutely furious that we had given this media exposure. And he gave our lawyer absolute curry in court, treated him like dirt. Here I'm the layman looking at these, he's going, you know. And so what happened with that little bit of drama we had in court? And I had the media in the court. I had one of Australia's top journalists sitting in the court watching the behaviour of the judge. And what happened in the end? Tax office fell apart. There's no way they wanted this constitutional issue tested in court. They collapsed. We're terribly sorry, but we got a written statement. We made a wrong decision. Right? So they had maintained that wrong decision, that wrong analysis, for 2.5 years against this guy. And if we hadn't been able to come in and defend him, he was bankrupt. These people are playing around again with people's lives. That's what we're dealing with, not some theory, people's individual liberty, the capacity to be your own boss. Now, why do I tell the story? We didn't win either of these constitutional arguments because it never ever got as far as we needed to go. What I've discovered is that this Constitution of Australia is far more powerful than we think it is. It is a constitution modelled very heavily on the Swiss Constitution and extremely closely on the US Constitution. It almost approaches a Bill of Rights. And we on our side of politics have chosen to ignore it. And what I've discovered is it has immense power. It doesn't mean that you have to win the case. The very act of taking it on gives you a dynamic in the process of change that is really quite awesome. We've got another case that we're working on at the moment, and if we can put the whole thing together, we're going to blow a hole in an aspect of the Federation. But there's a few lawyers doing a whole lot of discussion at the moment. So my message to you today is very, very simple. I think that we have in Australia a constitution that we should be using to defend freedom. It's there, let's not ignore it.
And just a quick reminder, there is the presentation, a paper from Ken in the app, and please send your questions through on the app. I'll keep things moving and welcome Robert Carling from the Centre for Independent Studies.
Tax and trade. I'm going to talk about the taxation part of it, and you must be the truly committed to still be here on Sunday afternoon, on a nice Sunday afternoon in the harbour city, to sit here and hear people like me drone on about taxation policy. But anyway, that's what you're going to get this Sunday afternoon. And it has been a fairly significant week, this past week, for tax policy wonks, because we had the launch of President Donald Trump's tax plan. I think there are a couple of good things about it and a couple of not so good things about it. One is that he has stuck to the proposals that he had during the election campaign. He's not retreated from any of that. He may have in certain other areas, but not on this. And secondly, it sets some very desirable targets of a company tax rate of 15% and reductions in personal rates with a top rate of 35%. I would love to see those rates achieved in the United States. I would love to see them achieved in Australia. I think they would be wonderful for economic growth. They would be wonderful for economic freedom. But there is a however coming. There is no explanation of how the plan can be implemented in the context of fiscal responsibility, or ultimately a balanced budget in the United States. Now, I know they say that, there are two schools of thought on this. One is that you can starve the beast. You can use tax policy, you can use tax cuts to starve the beast. That is, cut the taxes and expenditure cuts will somehow follow. History has shown that that has not been the case. Secondly, there is this the proposition that tax cuts will spark faster economic growth and they will be self-financed. They will generate additional revenue through the higher economic growth and pay for themselves. I think there is something to that, but you wouldn't want to rely on it to fund the whole lot. This is what the Americans call, they have their own term for everything, and they call this dynamic scoring. You allow for the extra revenue generated by the extra economic growth unleashed by tax cuts in your budgeting for how it's all to be paid for. So I don't think that you can rely on. There's too much of the former Treasury officer in me to rely on that, and I don't think you can just throw deficit caution to the wind. So there has to be a more fleshed out plan for how all of this is going to fit together, and that's what's going to happen when it gets into Congress, and goodness knows what the outcome will be. But as I say, the targets are very good ones. And the launching of this, there are going to be two lines of opposition to the Trump plan. One will be that it can't be paid for, and we can talk about that. But the other one will be that people just can't stand the idea of lower tax rates for companies and especially wealthier individuals. Regardless of any deficit considerations, they couldn't stand it even if there was a budget surplus. The response to those people is quite different. So I think that the focus should be on how the plan can be implemented rather than whether its goals are desirable, which I think unquestionably they are. Now, turning to Australia, and by the way, on the generation of faster economic growth, the supply side response from tax cuts, I don't want to go into the arcane voting rules of the United States Senate, but under certain scenario, yes, there could be tax cuts, but they are time-bound. That is, they automatically expire after 10 years, I think, and that's what happened with the George W. Bush tax cuts. And the automatic expiry came up under the Obama administration. And those kinds of tax cuts are not nearly as beneficial as tax cuts that are permanent, or at least where the default position is that they remain. Under the time-bound ones, the default position is that they disappear after 10 years. And that puts the opponents of the cuts in a stronger position to stop them in the end. So turning to Australia, we learned this week that in an Australian Bureau of Statistics release that the total tax burden in Australia is continuing to edge up, whether you look at it as percentage of GDP or per capita or real per capita, it's going up. In the last year, 2015-16, and it takes the ABS 10 months to come out with these figures for some strange reason. But anyway, in the last year, 2015-16, it was 28% of GDP for all the levels of government combined, and that has been inching up year by year, and it will continue to inch up. That is how the federal budget deficit will eventually be balanced, if it is balanced under current plans. It will be balanced by the automatic increase in average tax rates through this insidious process of bracket creep. So if Scott Morrison and Malcolm Turnbull wait long enough, yes, the budget will be balanced through that process. It's just, it has happened in history and it will happen again. It's just that this time it's taking a bit longer to happen. And I believe that, in essence, is their plan for balancing the budget. It's bracket creep. And we're seeing it happen already. But the tax debate in Australia is quite deplorable. We've seen that. It's the worst I've seen since I've been watching these things, and that goes back a long way. It's deplorable, for example, in the company tax debate, you have a relatively modest proposal from the government to reduce the company tax rate from 30 to 25% over 10 years. But despite the relative modesty of this proposal, you have seen red herrings galore thrown at it from its opponents, and they're all red herrings. And the public discussion of taxation in Australia has come to be like this. First of all, it ignores or simply does not understand what economists call high marginal deadweight costs of taxation. Secondly, it proceeds on the assumption that companies and better off individuals don't pay tax, or they don't pay the so-called fair share, whatever that is. Thirdly, it proceeds on the basis that taxation is all about redistribution and inequality, and that every change in tax policy has to ratchet up the degree of redistribution and progressivity. And fourthly, it assumes that the budget deficit is entirely due to a shortage of tax revenue and has nothing to do with too much expenditure. This is essentially, these are the four planks underpinning this deplorable tax policy debate in Australia now. And as I said, the only serious reform on the table, the cut of the company tax rate to 25%, is being countered by every red herring imaginable. We've seen how effective the campaign against superannuation tax was, or to increase superannuation tax, I mean, and we're seeing the same thing happen now on so-called negative gearing and capital gains tax. And I have no doubt that the way things are going, that campaign will be ultimately successful for those waging it. And I don't think we've heard the last word on superannuation either. So I think people like us, we need to counter all of this. And if we don't do it, there are not many other people who will. It certainly won't come from inside government. And it doesn't come from many in academia, with the notable exception of good people like Sinclair Davidson. We need to be taking every opportunity to emphasise that the economic costs of increased taxation, and you don't have to use the term marginal deadweight cost, but the economic cost of taxation are so high per dollar raised that they exceed any conceivable benefit of increasing spending from where it is now, and they exceed the benefits of a lot of the dollars that are already spent. So on a cost-benefit analysis, increasing taxation makes no sense. Secondly, that companies and the top 25% of individuals are already paying a great deal of tax. Roughly, the top 25, and you should tell this to everyone who's willing to listen, that the top 25% of individual income taxpayers generate 50% of the taxable income, but pay 2/3 of the total tax paid. The top 1% pays 17% of all the tax paid. So all of this talk about all these millionaires out there who pay no tax and the companies who are dodging their tax completely is complete nonsense. Thirdly, we need to be emphasising that the tax transfer system is already highly redistributive, and inequality is not increasing in Australia. And the onus is really on those who say we need more redistribution and more progressive taxation to make the case as to why it needs to be. And as I said before, if the federal budget is going to reach balance as planned, it will only be because of bracket creep, lifting the overall tax take. The government needs to be less passive and do the job by cutting spending. I'll leave it there.
Thanks, Robert. I'll give you a heads up on one of the questions coming for you, but who's going to pay for the wall? Next up, we have Jordan Williams from the New Zealand Taxpayers Union. Welcome, Jordan.
Well, it's not very often a Kiwi gets to say this, but you really are the best show in town because the Warriors just beat the Roosters, which I don't think I've ever been in Australia where Warriors have actually won a game, but yeah, what's this? Very good. All right, so Tim Andrews asked me to come and present to you on a Sunday afternoon and give you a comparative analysis of the New Zealand tax system vis-a-vis the Australian tax system. And I can't think of anything more exciting than dealing with that before you. So I'm going to spend a couple of minutes doing that, but then I'm actually going to get into what I'm passionate about, and I hope that as libertarians we are too, and that is selling that message. How do we make sure that other people are as excited about as us, or as angry as we are about the ridiculous amounts government take from us, and whether that is fair? You may even get a video if we have time, and at the end, if you do want to talk about the New Zealand political environment, we've got an election now in less than 6 months' time. Obviously, the Brits have now gotten and beaten us to it, but we're in a post-John Key environment, and with an electoral system that makes every government, since we've had it, a minority government in a very close race. So, firstly, we beat you to the GST. We're very fortunate that we have almost no exceptions, and we, as a Kiwi, we're very proud of this. And I was having a look. I was amazed I had to download a PDF just for the list of basic foods that are exempt from GST and those ones that aren't. And I've just highlighted that as a lawyer, whenever you see in official guidance the words some or by certain operators, it seems even the summary just points to the extent of complication in your system. But of course, having lots of exceptions, at least we're not as bad as the Brits or some countries where we've got different rates. At least it's a in or out system. For us, it is simply financial services and residential properties, or renting residential properties, and the metals. But on to the more important fight we're most concerned about, because from an economic perspective, we prefer the GST style, or value-added taxes. This is where the vast majority of our work is focused on, because it's the income tax where we've got the higher economic cost in terms of the inefficiencies and the effects on decision making. And you'll see here in the the Australian gold, your marginal tax rates, and in the stunning black, the New Zealand equivalent. So we don't have the tax-free threshold. That's probably in fact, as part of next month's budget, it's almost certain there's going to be some sort of tax package in it, and that is one of 5 models. This is the plug for our latest report. But it is one of the 5 models on how you might spend the $3 billion that we're pushing for tax relief in it. But you'll see also that, of course, the extent to which that marginal rate hits the high-income earners is obviously a lot higher in Australia. But just to point out that where our top rate kicks in is only about $5,000 more than the average income earner. So it kicks in very, very low. This is a document that is very similar to what Robert was talking about here in Australia. The top, correct me if I'm wrong, top 1% paying 17%. This is the equivalent here. And we find, as much as the left complain again about the rich pricks not paying their fair share. We have in New Zealand the top 17% paying 60% of the income tax, or put it another way, the top 8% of New Zealand income earners paying 40% of the burden. There is on the lower end, there's some effects with, we've got a complicated tax credit system, which I'm going to leave that aside unless someone wants to get into in the Q&A, but this does factor that in. So, based on the attention of the audience, the lesson I actually want to message number one, is that taking this on, and this is our ultimate, failure or measure of success, is the extent to which, as a centre-right government in power since 2008, to what extent have they actually matched their rhetoric about being a low-tax government versus simply the default of spending more and more of other people's money. And this is our new Prime Minister, Bill English, but had been the Minister of Finance. In fact, the National Party had cancelled more tax cuts than they had actually implemented because, of course, after the election, and it's a little bit like getting back to surplus. It's always in a few years' time, isn't it? So our main objective, obviously, is to reduce the size of that tax burden. But we actually seldom talk about tax because for our supporters, of course, we light our hair on fire about talking about tax, but the average member of the public doesn't. So our business model is focused on the other side of the equation, which is spending. Because for the vast majority of the public, they're not going to demand tax cuts for any sort of ideological or theoretical reason. It's because that we have convinced them of this really radical idea that you and I spend our money better than those bastards in Canberra or Wellington or down at the local town hall. And the way we do that is by highlighting wasteful or silly expenditure in the way that the Canadian Taxpayers Federation, the British Taxpayers Alliance, Tim, and I want to make a mention of the wonderful, and it occurred up until 2015, the Waste Watch program that CIS conducted, of focusing not at the huge pieces of public policy that we can't get in the media about, but things like that $150,000 television screen you can see behind our mascot and I, giving them an award. And this, and I love this one. It's only $250,000. But this leaflet on the side, it's called No Car, No Problem. And it was produced by the good people at the Ministry of Senior Citizens in New Zealand. And it, as I say, $250,000 on this. And it was for doctors to give patients when they removed their licence from them because they got too old. And the point of the leaflet, and I'm not exaggerating here, is to explain options once you lose your driver's licence. And it included a list. Take buses. Get a taxi. Have friends and family drop you places. So at the very time your life is changing, you lose your licence, thank God the government is there to patronise you at the same time. And this went bananas. You know, I mean, it's a real hit and miss, this job. You just don't know what's really going to take off. But this was one of them, and we got lots of talk about media of it. There were, as you can imagine, the shock jocks read it aloud. You know, great public service there. I mentioned the Waste Watch there. So it was part of, when CIS did it, it was part of a much broader campaign which, yes, they talked about the rats and mice, but it was actually the foundation of a campaign which was we need to get government under 30% of GDP. So I'm sure sometimes when you hear Tim Andrews on the radio complaining about examples, MPs' pay. I mean, as a taxpayer advocate, I hate talking about MPs' pay. You guys know it doesn't matter. I know it doesn't matter. We'd much rather probably have a Singapore model where you pay loads and actually get very good people. But nothing drives traffic to our website and talkback radio like MPs' pay, and it reminds people of that ultimate message that you spend your money better than they do. the Canadian Taxpayers Federation, the woman there, I have her name somewhere, Bev Oda. I constantly are telling my staff and interns that, that we're looking for the $16 glass of orange juice. This woman she's a federal minister, or was a federal minister in the Canadian government in Canada, was on an official trip to DC, turned up in DC, the hotel wasn't good enough, forced her staff to go and book another one, and at the new hotel, when they got the receipt, she'd ordered a $16 glass of orange juice. Now that $16 glass of orange juice, which is exposed by the Canadian Taxpayers Federation, absolutely dogged her. And 6 months later, she eventually resigned, and among it was the regret of the $16 glass of orange juice. So again, we've heard wonderful speakers over the weekend about meaty economic issues and public policy, and that's really important. But politics is emotion. And that, whether it's the leaflet, an enormous TV, another one we exposed that got a huge amount of coverage was hair straighteners for staff in a government department in their toilets. It just went like, people were they don't know it was us, even the Taxpayers Union, but the vast majority of New Zealanders have heard that story. So the message is that to further our cause around the size of government, let's talk less about the tax side and about the spending, because the two are inherently connected, and it's a heck of a lot easier to make the emotive argument around the spending side than the tax side. The second point I want to make is that as Western societies have made paying taxes a heck of a lot easier, and from an economic cost point of view, we actually often support measures that make or reduce the compliance costs of taxes. But there is a cost to that, because, for example, in New Zealand and Australia, I understand it's not quite this simple, but the vast majority of New Zealanders don't have any tax paperwork during the year. We don't file annual returns because if you're a salary or wage earner, it all comes out of PAYE, pay as you earn, it's deducted by your employer. So you simply, unless you're reading your pay slip, you're just not seeing that tax deducted. And one of the ideas that we're very keen on pushing, and we've actually got the Bankers Association on side, they tell us it's not technically difficult, is for anyone under 40, you probably don't open your pay slips. Your pay is simply what arrives in your bank account. And as far as we know, this hasn't been done anywhere in the world, but we want to, and it's regulation, it's a scary word, none of you are going to like me, but to require banks to have on your bank statement the gross amount, update the balance, and then take the deduction at the bank account level or at the internet banking level. The other thing we do is just that gentle reminder of how much that beast of the state is costing. I know that, I think it's CIS here do the tax freedom days. That's our other big push in this area, but if you do have any more ideas about how we give that gentle reminder about how much that beast is costing, I'd really welcome it. So without further ado, I think I'd rather leave time for questions rather than anything else. I'm sorry we did miss out on the video, but yeah, thank you.
Yeah, no worries. So, Andrew Bragg recently wrote a book called Fit for Service, all about trade. But unfortunately, he also recently got appointed as Federal Director of the Liberal Party, which therefore means he no longer has any opinions of his own and cannot be here today. So in his place, we have Sinclair Davidson. So please welcome Sinclair.
Well, thank you so much and for having me again. It's always very exciting when people turn up and they've heard you once already. I just want to abuse my position slightly here and just comment on a couple of things the previous speakers have said. And can I just say from an entirely personal perspective, I love fiscal drag. I think it's fantastic because I'm already in the top marginal tax bracket. And so there are going to be a whole bunch of my fellow Australians joining me in the top marginal tax bracket, sharing the burden that we have of all those welfare bums as they get means tested out of the welfare system. What can possibly go wrong? So we're going to end up more or less with a flat tax at 45%. That's not ideal, but hey, well, it's a flat tax, isn't it? So I actually expect over time there will be some movement, perhaps involuntary movement on that particular perspective. But I'm going to talk about what Chris Berg and I have been up to over the last couple of weeks. Mine's out the gutter. So the federal government have decided that they want to tax goods coming into Australia that have a cost or price of less than $1,000. So that's what we're going to talk about. Now, I imagine that 99% of the people in this room think that Australia has a consumption tax and that consumption in Australia is taxed. Well, that's actually not quite true. We have a sales tax. And it is a net sales tax, and it is a value-added net sales tax, and the government knows it's a sales tax because if you look at the budget papers, they list it as being a sales tax. It is a sales tax, but because the idea is to tax consumption, we then bolt on a few strange things to the sales tax. So sales which are to foreigners are GST free, generally speaking. If you're a foreigner in the country and you buy it, you can in theory get the money back at the airport. It's a lot of people just don't bother in the grand scheme of things. But so exports are GST free, but then the argument goes that we should levy the sales tax onto imports coming into the country to make it into a consumption tax. And so we have the issue whereby we have a practical problem. And the practical problem is that we can't police the borders particularly well. And so there's a cost to collecting this money as it comes in through the border. And the Howard government made a whole bunch of pragmatic decisions and principled decisions. And they decided that more or less goods below a certain price level were not going to be taxed as they came in. They would be tax-free. And when they brought the GST in 2000, nobody really thought that much about internet sales and what have you. So it worked pretty well in the grand scheme of things. And we have more or less then a consumption tax. Now, the other thing I want to make, a point I want to make about the consumption tax is that the idea that a tax on sales is a tax on consumption is an assumption by itself. The assumption that the business can pass on the 10% tax. Now, whether or not a business can or cannot pass on a tax or any other cost is more or less a function of relative supply and demand curves. And without getting too technical, you have to have some sort of market power if you want to pass on a cost. For a lot of small businesses, I imagine they actually absorb the GST themselves because they don't have the ability to pass it on. So the notion that we have a consumption tax is actually an assumption, but nobody questions it too much and everybody's quite happy, and an old tax is a good tax, and by now the GST is an old tax and not too much excitement. In 2013, the Liberals in opposition made a whole bunch of very silly promises. And one of them was they were going to have a look at the threshold. They were going to look to applying the GST to goods at less than $1,000 because, after all, it is unfair on small business that their competitors don't have to pay GST. And, of course, if the price differential between foreign goods that you buy on the internet and domestic goods that you buy in a shop was 10% or less, there may be some sort of story here. But in actual fact, my former PhD student, Michaela compared online prices to actual prices in stores, and she found that at the minimum there's a 40% difference. So when you are buying things online, you are getting at least 40% cheaper than buying it in a store. Now, of course, the argument goes, yeah, but they've got costs and what have you and so on and so forth, and as a consumer, I don't care about your problems. Really, you should actually be competing better and do a much, much better job. Now, as it happens, I don't buy very much on the internet. I buy 2000 AD comics and I buy stuff from Amazon.co.uk, where I pay 17% VAT because electronic books in the UK are VATable. Very annoying, doesn't matter. Okay, I can't get those things here in Australia. My wife buys so much stuff on the internet that the lady at the post office knows me. So when I walk in and I hand over the slip, she says, "Oh, hello, Sinclair, what's Dominique bought today?" And I say, "I've got no idea," as she hands over the boxes. Okay, but so that's all very well and good. So the argument is that it is not fair on Australian retailers that online sales are GST free. So the government decides that they are going to look into this and do something about it. And a few weeks ago, I mean, they kind of mentioned it a few times now and again, but a few weeks ago, they actually put a bill into the parliament. We've had the second reading speech, and then all of a sudden there was a Senate inquiry. Now, if you buy a good, let's talk about goods. If you buy a good on the internet at the moment and costs more than $1,000, what happens is it gets held up at customs. Customs send you an invoice for the GST and the customs, so you actually pay more than 10%. I imported a table from India last year, and I worked out I would pay about $40 of GST. I ended up paying like $170 because they put on customs duty, and then they charge you for charging you. So it doesn't matter, but you pay whatever it is. And so they hold it up at customs, and they send you the bill, you pay the money at the post office, and next thing the goods and services arrive. The Productivity Commission had a look at this a couple of years ago, and their argument is it doesn't pay to collect any money less than $60 in GST, which means it doesn't pay the government to collect anything less than $600. Okay, this is all very well and good. People are saying, well, we've got a point of principle here. But the problem is, the point of principle is that we've got a budget deficit. So we would be borrowing money to collect tax at a loss if we were to push it all down. So this doesn't make any real financial sense. Okay, so what happens next is, I reckon, a whole bunch of very smart, honest graduates that the Treasury employs are sitting around over beers on a Friday night thinking, how are we going to solve this problem? How are we going to raise the money? And one of them says, you know what? We won't levy the tax on the seller on the assumption they pass it through to the buyer. We won't send the invoice to the buyer. We will tax the internet platform. So eBay or Amazon Marketplace or these places, they will collect the tax. And they're all backslapping, guys. How clever is this? How smart we are, graduates of G8 universities, and what a great idea. Well, as it turned out, I've got to thank you. As it turned out, Chris and I were at the Senate inquiry, and we walked in, and Senator Jane Hume of Victoria, a Liberal, lovely, lovely lady, was absolutely smacking the snot out of the Treasury people when they were trying to explain this to her, how it would work. And I put it to you, she's the very first person to have stress tested this idea. When she said, I want to buy a handbag on the internet, how is this going to work? And this was their birthday cake moment. For those of you who are not from Australia, a previous leader of the Liberal Party was asked to explain how the GST would apply to a birthday cake, and to be fair, he explained it perfectly correctly. But by the time he was finished, the GST proposal was dead. Anyway, so they were sitting around. So what are they doing? They are not actually bringing in a GST that the seller's got to collect the money or the buyer's got to pay at the border. They are taxing a third party. Now, Chris and I actually demonstrated the absurdity of this proposal by taking one of the government's own examples in their own memoranda statement of explaining how the tax would work, and the story is as follows. A guy in Hong Kong buys a $700 artwork from a guy in Vietnam and sends it to his niece here in Australia as a gift. Currently, this is tax-free. Under the proposal, what would happen now is that $700 gift would be taxed. Imagine our friend in Hong Kong, Chinese national in Hong Kong, buys the $700 artwork from the guy in Vietnam over an electronic platform. Let's imagine this electronic platform is now based in the United States. The American company is liable for 10% of the sales price to the Australian government because a guy in Hong Kong bought an artwork from a guy in Vietnam. Okay, where is the connection to Australia? This was their own example. Okay, we didn't make this up. This was their own example. Now, to take it further, in the bad old days, if you had phoned up and said, "Hi, I want to buy the artwork," would Telstra have been responsible for collecting the tax? The guy from Myers was saying, "Oh, we have to have this." But can you imagine if Myers wasn't paying their tax? Would the supermarket mall that they are operating in, would they be liable for Myers tax? Because that's the same principle. The person who is facilitating the transaction is liable for the tax. Unsurprisingly, companies like eBay and what have you said, we just can't afford this. The 10% tax on the sales is probably more than the transaction cost that they are, or the fee that they are charging for the whole thing. They said, "Well, we'll probably just geo-block Australia." And of course, everybody jumped up and down. How dare they? Oh, shocking bad. But of course, these people are now up for reputational risk. They're up for legal risk. They could be extradited to Australia and charged for being tax cheats. When Senator Hume said to the people from the tax office, thank you. When Senator Hume said to people from the tax office, "How are you going to enforce this?" They said, "Oh, no, we're pretty sure the foreign companies will all comply." And then she said, "Well, but what are you going to do if they don't?" She said, "Well, we will tell their tax authorities that they're not complying with Australian tax law." And I thought, but hang on, under the internet laws of the United States, they're not allowed to do that. The other problem that, of course, that we have, so they would be telling the American authorities that an American company is fully compliant with American law. I thought, yeah, okay, nice. The other problem is, of course, let's imagine they do collect the 10% tax and then pass it on to the Australian government. How are they going to convince their own tax authorities that that is not taxable income in their jurisdiction? So how do you get over that double taxation problem? So all up, it's a complete dog's breakfast. A shockingly bad idea because a whole bunch of admittedly very smart, honest students sitting around thinking, "Gee, how are we going to solve this problem?" came up with a brilliant scheme, but nobody has stress tested it. This idea has gone straight from harebrained scheme to second reading debate without anybody saying, how is this actually going to work? And I can certainly tell you when the Mrs. Davidsons and all her cohort suddenly are on the internet, on their tablets at night at bed buying and what have you, and are finding not for sale in Australia, certainly there's going to be a lot of angst. Dominique always shouts at me like it was my idea when these sorts of things happen, and I'm sure there's going to be a lot of very annoyed wives and very annoyed husbands, and our friends in Canberra have certainly been not as smart. I think even by their own standards, this particular one is particularly dumb. But thank you.
Okay, got a few questions here. I'll rip straight in. I'm going to start with Darcy's question. If we could just go through the panel, what taxes are your top priority to abolish and why? Do you want to kick us off, Robert? Oh, sorry, Dave. Yeah, the microphone.
To abolish, no. To abolish and why? Oh, well, state stamp duties, I suppose. They're an anachronism, especially the one on buying real estate.
Our local government's almost entirely funded by rates, but it's on capital valuations, so you're taxing any improvements of the land. There's arguments around land tax because you've then got the incentive to make the best use of it, whereas capital valuations, what you find is CBDs and commercial property is just pillaged. There's no good economic reason for it.
Often I don't really think it matters which, because whether they take the money out of your left back pocket, your front pocket, or your right pocket, so they're still taking the money. But with the rise of independent contracting, the number of self-employed people around, the administration process around collecting income tax globally is in serious trouble and is on a hiding to none.
For probably purely pragmatic reasons, I would abolish the company tax down to zero. and that's pretty pragmatic. I have a long list of taxes that I would abolish. So of the 116 taxes that Australia levies at all levels of government, 10 raise revenue. The other 106 are all nuisance taxes. I would abolish all of those 106, more or less straight away. But I think for pragmatic reasons, the company tax I would abolish.
Jordan, did you want to change your answer?
No, that's right.
Is that on? No?
Yeah, well, but the company tax one here is interesting because it's really just a withholding tax. Because your imputation system, I think you call it something different, a franking or something. Yeah. So it's really just a timing issue. So why have it? The only additional revenue you get is foreign investment. But if you want to tax that, well, let's tax that separately, which of course is unjustifiable. But you know, I mean, if you want to invest in Australia or New Zealand, then we force you through the usual income tax regime rather than have this enormous company tax regime that is only pretend for the purposes of if you're a domicile income earner.
Yeah.
Can I just add, I want to abolish a tax that doesn't exist yet. I want to get in early, and that is the nationally coordinated, I forget the exact terminology, but the uniform national tax on vacant residential real estate. It is the most stupid idea I've ever heard. It might appeal to some people in the current environment. A lot of talk about affordable housing and so on, but it's really a dumb idea. It would be impossible to administer. I think Victoria is going to have one, but somebody else, I won't say who, but somebody else has said, well, we should have it everywhere.
Excellent. There's another question here from the UK from Sam Bowman. The VAT exemptions. Let me try this.
The VAT exemptions are insanely extensive and scrapping them could allow big cuts to income tax. Obvious problem is that it seems regressive to get rid of them. Are you or anyone on the panel aware of successful campaigns to get rid of any VAT exemptions in New Zealand, Australia, and any thoughts on how we could go about arguing for this effectively?
Well, we were very lucky that we never got into the debate around exceptions, and once you start, it's very difficult to stop. It's what the lesson that India have just taken. But it's I'm not aware of any countries going backwards. Still in New Zealand, the last election there was one of the minor parties, the Maori Party, that did end up holding the balance of power, arguing for an exemption on fresh fruit and vegetables.
The Australian GST is quite extensive, so we have exemptions for fresh food, education, health, and some government services, so we don't have very many. The Howard government was actually very clever when they instituted the GST, and I think trying to change the GST is poison in the political system here. I would sort of think when it comes to things like health and education, I'd actually be cutting the subsidies to those sectors before we start taxing them. I mean, it does seem to be strange to tax a subsidised good. So I would be taking out the subsidies first. But as I said in one of the other panels, my preference would be to our GST money only goes to the states on some sort of per share basis. My preference would be to abolish the GST and replace it with the state-based income tax.
And another question for Ken on the topic of people committing suicide due to the offloading of the soul. No? Oh, okay. All right, well, we'll cut that question out then if you don't know. If tax is now going to be collected by companies, is there any need for government tax collectors? Does someone want to field that?
I would only have government tax collectors. I would also abolish withholding tax. So I like the Hong Kong model where you pay your tax once a year and in cash, and you've got to turn up at the revenue building and hand it over, because that way you know precisely how much tax you are paying, and there's none of this fiscal illusion that somehow the money was never yours. The Hong Kong banking system even have a rate, so if you actually don't have the cash on hand at the end of the year, you can borrow from the banking system, and so there is a daily rate which gets reported. So when anybody in Hong Kong talks about taxation, people know exactly how much it's going to cost them, and they know exactly how much interest they're going to pay on their borrowing. So the tax cost is upfront and explicit and known to everybody, and I like that idea. Milton Friedman stuffed up big time when he brought in the withholding tax, or he proposed the withholding tax during the Second World War. The Allies won the war, but the taxpayers lost the war.
Does anyone else want to take a swing at that? No? I'll move on. Are there any ideas for changing the tax regime that applies to superannuation that would reduce generational imbalance? Sinclair again.
The Howard Costello 2006 superannuation tax reforms are probably unaffordable in the grand scheme of things and in the long run. We moved from a situation where you taxed the money going in while it was in and when it came out again. I think it was at a 15% rate for all three of them. And what they did was they kept it taxed at 15% going in, 15% while in, and it's now tax-free coming out. What I would do is I would change the system that it gets taxed on the way out at your marginal rate, whatever that may be, and goes in as tax-free income, because that certainly gives you the benefit of the compounding, and it more or less matches the payment of the use of services and the tax you are paying. Now, when I suggested this to Peter Costello a few years ago, he said to me, "Don't be silly, Sinclair, old people don't pay tax anyway because they don't have much income." Now, that is true. This is not going to be a big earner for the government, but certainly superannuation income should be taxed as ordinary income. I don't see why it should be quarantined out. The other question that people very often ask me is, don't you think we should just abolish superannuation in total? It's coercion and irresponsible and infantilizing people and what have you. I'm a huge fan of the superannuation system because I know that if there are old people who can vote who've got no money, they are going to vote to steal my money at some point in the future. So if they are forced to save for themselves, they won't be stealing my money. So I'm a big fan of this. They are being forced to save so they don't steal.
Yeah, I'll make a comment on a slightly different perspective. It's about the lack of transparency, or the zero transparency required of both the retail and institutional superannuation funds. We are running a very great risk that we are looking at a giant Ponzi scheme. When you look at the demographics of the superannuation system, it is a system that relies on the constant input of the superannuation guarantee into the funds to bolster up where they're going. And as my generation, the flower-powered children start to retire, we're going to start to draw down on those funds in a very heavy way. And I've got a serious question over whether or not the younger generation here are putting enough money into the superannuation system to be able to pay us out in our retirement. And the reason I'm extremely suspicious about this, because I really do question the returns, the declared returns, particularly of the industry superannuation funds, because there is absolutely zero requirement on any fund to disclose anything about anything that they do. And it is a national scandal. Some years ago I organised a report for the Institute of Public Affairs on the issue, and we exposed how the structure of the industry superannuation schemes and funds in particular operates, and no knowledge about any of the money or how it's being managed or where it's going or what's going on is required at law. The returns that are declared by APRA about the performance of the funds are simply APRA reporting what the funds say they are receiving. Of the three major auditing companies of the superannuation system, two of them are essentially owned by the superannuation funds themselves, and the only one that's independent, Morningstar, in the Cooper report going back a few years, the Cooper submission said that they were considerably concerned because they don't believe that they can do accurate reporting on the performance of the funds. So I think that we've got a real danger of, so if we're talking intergenerational, I think we've got a real danger of a Ponzi scheme on our hands.
Just before I pass over to Robert to have the final say, I'll use my moderator's prerogative to say that to just remind everyone that if you are in an industry super fund, you are funding the union movement and you have to sleep at night with that. Robert, over to you.
Well, my way of looking at all of these tax concessions, so-called like superannuation and capital gains tax and so on and so forth, is that they're there basically because the normal income tax rates are so high. And so if you get rid of the concessions or reduce the concessions, you're just validating the high tax rates, normal tax rates that are already there. I would rather go about reducing the concessions by reducing the normal tax rates. And that in itself would reduce the concessionality.
Did you want to say something?
You can ask that question about...
Yeah, well, we're over
time, so it's a few minutes. Go quickly.
Someone asked really quick on the app, well, who has the best tax system in the world? And there is and it's something I'm really interested in talking to people afterwards about, around the argument around compulsory savings accounts in various forms. There's a paper we're going to be releasing later in the year, probably after the election, which is a long-term project around adopting the Singaporean model, drastically reducing tax rates and spending by the government and shifting it over to personalised accounts. A lot of libertarians are against it because it's a compulsion. You must spend X dollars on a health account per year, for example. But I'm really interested in the papers. We've got a skeleton draft, but I'm really interested in having a chat to people on the relative merits of that.
Excellent. So we've gone a little bit over. I'll leave it there. Can you please join me in thanking the panellists one more time?